Okay, thank you for joining us in this presentation. We're going to discuss money multiplication. Now, some people would look at this and immediately think that's a bad idea, or someone is out to scam me. So we're just going to use evidence from sources you can trust. So this is an article from the Wall Street Journal, for example. So that's the kind of evidence we're going to be using to discuss money multiplication, so that you would see that it can be done, and it has been done in the past, it is being done as we speak, and it will be done in the future. The question is, are you going to be one of those who will benefit from it, or will you be among the many who make it possible for the few to multiply their money this way? Because really, this money multiplication happens because a few people create something and ensure that most people are not there at the time they're setting it up. And then at some point, they sell it off to all those other people who are not a part of the creation. And that's how they get to multiply their money by 2, by 10, by 100, by 1,000, by 4,000, as the case may be. But let's even talk about money multiplication in its very basic form. Now, if you bought a house or a condo for $100,000, say 10 years ago, and let's assume your down payment was $5,000. If the condo has now appreciated and today you can sell it for $125,000, and maybe you pay your realtor, pay legal fees, government fees, maybe you are left with 115, considering, and then you have to pay off the mortgage. So maybe your original 5,000 has now become 20,000, for example. So that's one way of multiplying money. Most people are familiar with that. That doesn't seem out of place for most people. They understand that. Another good example would be the lottery tickets that people buy. So someone could buy a ticket for $5, and if they win the jackpot for 50 million, 10 million, 20 million, 30 million, that's also another way of multiplying money. Or even if you buy for $5 and you win 10,000, 5,000, 500, 100, it's still another way of multiplying money. The only drawback in that arrangement is that there are many losers and very few winners. So the chances of winning are very slim, but not zero. So that's another example. Interestingly, there's another form of lottery that we would call the rich man's lottery, where everybody's a winner. In the poor man's lottery, the one that everybody participates in, everybody buys tickets, there are very few winners. Millions don't win anything. In the rich man's lottery, they all pull their money together and they invest in what you might call risky projects. It could be drilling oil wells, it could be the kind of projects that you see on TV, on Shark Tank or Dragon's Den, if in Canada. So this is how rich people multiply their money. So it's called venture capital, and you can read it up. Those who have mastered the art of it expect that if they invest in 10 deals, some 5 of them may just be sideways. They may not lose money, they may not really make any money. Another 2 or 3, they may lose everything, but 1 or 2 of those investments will give them returns of times 100, times 1,000, and that's what's going to cover all their other losses or break-even projects. And so that's the rich man's lottery, which interestingly is closed off to most of the population. So the closest people have come to it is watching it on TV. That's the same thing that people are doing on Shark Tank or Dragon's Den. They are really trying to put in $1 today so that in the next 2, 3, 4, 5 years, they can turn their $1 of investment into $10 or $20 or $100 or $1,000. And actually, part of that plan is you, because when they get those products going, they will finally take it to the stock market, usually, and sell it. And it's going to be the mutual funds that hold your retirement savings that buy those stocks. So you don't get to buy when they are buying like what you see on TV. You get to buy, 2, 3, 4, 5 years down the line when it's become very expensive. So they take their $1, turn it into 10, and move on to the next thing so that they can turn that $10 into 100 and into 1,000 and so on. And that's how they multiply their way up. So this is a little background to show that, yes, money multiplication is possible. And really, that is how the money is made. Anybody who has big money, to a large extent, had access to this kind of opportunities. Whether you're talking about a Bill Gates or a Michael Dell or Jeff Bezos, the Amazon.com founder, or even Mark Zuckerberg, the Facebook founder, all these people had access to shares of companies at very low prices, maybe 0.001 cents, and then later on they sold it for $10 or $20 or $40 to people like you. So the real question is not whether money multiplication is possible. The question is, are you the one making the multiplication possible for those who already have a lot? Or will you be one of those who will put the deals together so that when the multiplication happens, you will be able to turn your $1 of investment into $2 or $10 or $100 or $1,000. So let's look at 3 quick examples. And by the way, realize that these examples are few and far between. It's not something that those who benefit like to publish so that everybody will know. Sometimes it just comes out by accident or because of something else. So this is an article from the Wall Street Journal in March of 2012. They were talking about Mitt Romney, who was then trying to run for the presidency of the United States. And they were talking about what he did on Wall Street earlier on in his career. So you can go read that article yourself, but I will just take it on parts of the article that I highlighted. So, for example, in one particularly successful deal, Bain Capital, that's the company that Mitt Romney used to run, increased the equity value of a company it had acquired by 36-fold in 20 months. But some Bain employees saw a 583-fold increase over the same period on IRA, so individual retirement accounts. That's their own retirement savings. Money they had put in that account that they invested in the special share class of the company in question. So those employees, for every $1 they put into their IRA, the $1 became $583. That's one example. We'll go to another section of the article. Let's keep going. Yes, here. So in total, Bain employees purchased $23,581 of Wesley Jessen common shares in their IRAs. By the time Bain took Wesley Jessen public in an IPO 20 months later, those shares were worth $13.75 million. That's what filings indicate. So you can do the math. You can divide the 13.75 million by 23,581 to have an idea of how much money those people made. You're looking at more than times 500. And it says employees didn't sell their shares at the IPO, but by the time they sold, the IRA money they invested in common shares had multiplied 1,000-fold to more than 23 million. Remember, they started with 23,581, and it was now 23 million. So more than, 1,000-fold. So that's just a quick example of money multiplication. Again, remember, most of these deals are closed off to the average everyday Joe. So you don't get to hear about it. And the idea is that what you don't know will not make you feel bad. Let's look for another example. This is from the Globe and Mail. This is a leading Canadian newspaper, probably the largest one right now. And this is an article about some fellow named Mike Rose. He is in the oil industry in Alberta, but let's just focus on some particular sections. So, for example, this guy started a company that was named Berkeley, which was forced into play by a U.S. oil major, Hunt Oil Company. But Mr. Rose found a white knight in Anadarko and shareholders, and so the shareholders of this Berkeley, some of whom came in for $1 or less, walked away with a takeout price of $11.40. So even those who came in at $1 saw their money multiply by $11 in that instance. So this Berkeley was formed in 1993. I don't know exactly when it was sold, but I would imagine that all this took place within a period of less than 10 years. So let's look for another example. Mr. Rose went on to start another company and he sold it to Shell. And in this highlight, the deal proved a bonanza for Mr. Rothman, who had bought his early shares for about $3 and sold out for $83. So that was more than times 27. So again, all this happened over a period of less than 10 years. So that's another good example of money multiplication. Let's look for one more example that we can find. Facebook. And this is an article from the New York Times, dated February 1, 2012. And so it starts by saying the graffiti artist who took Facebook stock instead of cash for painting the walls of the social network's first headquarters made a smart bet. The shares owned by the artist, David Choi, are expected to be worth upward of $200 million when Facebook stock trades publicly later this year. And, that's the artist, and saying that his payout may be $200 million or more. And it says some investors may make billions of dollars. So let's look furthermore in that article to see some other examples. So Facebook's first outside investor, Peter Thiel, the billionaire contrarian, led a $500,000 investment in Facebook in late 2004. So he put in $500,000. So he now has 44.7 million shares that could be worth more than $2 billion. If it's indeed worth more than $2 billion, then you are looking at money that has multiplied by 4,000. So here it says Accel Partners invested in the startup 7 years ago. So that was in 2005. And Accel could have 1,000-fold return on some of its investments. So that's another example. When Google went to the market with its own IPO in 2004, hundreds of people joined the millionaire ranks, including secretaries, a company masseuse, and a company chef. And look at Mark Andreessen, now a Silicon Valley venture capitalist who invested early in Facebook and holds 3.6 million shares worth nearly $200 million. We don't know when he invested and how much he invested, but again, this is how people make a lot of money. Bill Gates controlled only 49.2% of Microsoft as it went public in 1986. So let me look for one more example if I can find it. So yeah, well, in 2005, this artist was invited to paint the walls of Facebook's office, and he was offered a choice of being paid cash in thousands of dollars. Some people have estimated it at about $50,000 or $60,000, or stock worth about the same. So he took the stock, and the rest is history. That stock, as of 2012, was worth probably about $200 million. So these are some examples to show you that money multiplication is being done. The real question is, if it's been done, why haven't you benefited? And the simple reason why is because those who are benefiting don't really want you to benefit. So they know what you know, but to a large extent, you probably don't know what they know. They understand everything you are doing. They know how you make your money. Usually, maybe you go to work, you own a small business, or you're a professional, maybe a doctor, a dentist, a lawyer, an accountant. So you have to work and make money, or maybe you even own a small business, you're selling goods or services. You have to work, you have to hustle to make money, you pay your taxes. So they understand that world. They want to keep you in that world because you get to pay the taxes, they get to make the profits, and they don't pay taxes. So this article is from a website called Who Rules America. It's set up by Professor William Domhoff. This man has been a professor for about 50 years now, since 1965. In fact, he's kind of retired now, but they call him a professor emeritus at the University of California. So you can check out this article yourself. But this article was written by an investment manager who works with very wealthy clients. So some things he had to say include the fact that if you look at this red highlight, a highly complex set of laws, those are the laws that hold 99.9% of the population, keeps them working, paying taxes, getting squeezed at every turn. So those laws, and then exemptions from laws and taxes. So if people are exempted from these laws, they are also exempted from taxes. So these have been put in place by those in the uppermost reaches of the US financial system, or the Canadian financial system, or the British financial system, as the case may be, or in fact, any financial system anywhere in the world. It allows them to protect and increase their wealth. But what I want you to focus on is this second half of the paragraph. Ordinary citizens in the bottom 99.9% are largely not aware of these systems, do not understand how they work, are unlikely to participate in them, and have little likelihood of entering the top 0.5%, much less the top 0.1%. Moreover, those at the very top have no incentive whatsoever for revealing or changing the rules. Earlier on in the article, he put it that, the odds of getting into the top 0.5% are very slim, and the door is kept firmly shut by those within it. So that is it. So they understand your world. They don't want to be a part of your world where they have to work and pay taxes. What they want is you do the work, you pay the taxes, you take all the risks, you do all the saving, and they get all the profits. And if for any reason they make some bad bets, you get to bail them out. So they privatize the profits and socialize their losses, if any. So that is the world of billionaires. So the real question to you at the end of the day is, do you want to be among the enablers that make it possible for the billionaires to get away with what they are doing? Or do you want to be able to play by the same rules that the billionaires play by, so that at least, even if you're not a billionaire, you are not losing out, so that you can benefit from this kind of money multiplication opportunities? And oh, by the way, I forgot to mention that it's also possible, again, but not for everybody. The billionaires get to do this. It's also possible the billionaires are able to structure this in such a way that you saw the example of Peter Thiel, the guy who put in 500,000 into Facebook, and maybe it's now worth over $2 billion. He's able to realize that gain. He can sell off all those shares for the $2 billion and avoid taxes on it. It is possible. Now, if you are trying to do that, you will have to pay at least capital gains taxes, which, are still lower than income tax for those who go to work every day. But a billionaire knows how to get away with disposing of those shares and paying zero in taxes. When we start talking about taxes in other videos, you would see how this gets done. Again, we'll show you the proof. So it is happening. The question is, are you going to benefit from it? Or are you going to be among the many that the billionaires are benefiting off of? So the choice is yours. If you would like to do what the billionaires are doing and benefit from these money multiplication opportunities, then you need to sign up for the Fractional Billionaire Project as quickly as you can, because as soon as the project has enough participants to achieve its goals, no new members would be able to come in. So thanks for watching and good luck.